Today we are reviewing the trade that I took from yesterday. Go over some trades, some opportunities, and some mistakes that I did, psychological and technical. So let's go over on the monthly. Still the same thing as previous video. If you guys haven't watched that, you guys can watch that first. But this is February 1st today, so we just started this new monthly candle, but this is the previous monthly candle. We ended bearish, so because my target was this draw on liquidity, so I was bearish as well. Let's go to the weekly. Pretty much the same thing, just that target right there. Daily as well, we have basically just fully disrespected this fair value gap right here. Our next draw on liquidity is just this low. Of course I would be expecting like retracements here and there, but ultimately this is our draw on liquidity. So going down to the 4 hour, we took out liquidity, we went up, rebalance into equilibrium. So my draw on liquidity was here, right? So that's our London session start. We rebalanced and we were heading down. So yesterday I was actually bearish as well. If we look here, we swept this liquidity right here from this wick. So liquidity swept right there. That was my first target, and then this was my next target. So if we go down to the 1 hour, a clearer picture. So this is what happened yesterday. Coming into London open 2 a.m. coming into London Q zone, we had this sweep of liquidity right here, and I had these two targets right here. But my main concern yesterday was that we had these two very big candles. So if we were to look at the Q zones, this was our Asian session right there, and we had this fair value gap right here from the 30-minute as well as the 1 hour as well as the 4 hours. Pretty much the same thing. So let's go down to the 30-minute. Here, this was my fair value gap. As you guys can see, we swept this liquidity, we were going down, we had this fair value gap created, and then we tapped into it. When London session opened, I went down to the 5-minute. This is all available on TikTok as well. I usually post it on TikTok a bit earlier, but I go a bit more in depth on here. On here, we can see tapped into the 30-minute, 5-minute fair value gap created as we had that market structure shift, taking out these two lows, and then we re-entered into that 5-minute fair value gap. Then 1 minute. Okay, this is where I had a loss yesterday, but we had this fair value gap right here, this 1 minute fair value gap. I took an entry here, stop loss here, and I got taken out. Second entry here, where we had this fair value gap right here. You guys can see this fair value gap right here, this candle. So we had these two entries, and honestly my mistake was just the fact that I put my stop loss above this high. I should have put my stop loss above this high, then it would have gotten taken out, because it was based on the 5-minute structure, because that was the first tap of the 5-minute candle, right? So the first tap of the 5-minute candle, my new rules is that we should wait after we respected the 5-minute candle already. Then we look for a 1-minute entry model. So that one, it was respecting, but we had no way of knowing for sure that it respected, because that was the first touch. But that's okay, because this was a 1-to-7 risk to reward ratio, targeting the low. So the first one was targeting this low right here. So the first trade we targeted that low. First one we targeted that low, then that's it. Then we had this liquidity sweep of that low. Go up to the 1 hour. You can see we got a retracement. So after that, we basically swept liquidity of the Asian session lows. Then we got up, right? So I was trying to look for longs along here to target the middle of this range. So if we go down to the 5-minute, we swept liquidity right here. We created this 5-minute fair value gap. So this could have been an entry. If it was the session liquidity kind of strategy, you can just do that. Target a 1-to-2 or around middle of this range. Or target the top part of that fair value gap, the second fair value gap, or that. Which would have been the best play, was just we swept liquidity, we created a fair value gap, went into it, and then we targeted that Asian session high. That would have been a very good trade, but I didn't catch that, because after this 5-minute, after the first tap right here, this candle, you can see this candle tapped into it. I went down to the 1 minute. Right here on the 1 minute, as after it tapped, we broke structure right here. We had a market structure shift right here. we had that fair value gap right here. I took a long position here with stops here, which I got stopped out, and then I targeted like 1 to 2 or something. Afterwards, here I couldn't find an entry. There was no 1 minute model there, but I could have just taken that 5 minute trade. 1 minute is usually not really for more confirmation, but just for better risk to reward. So that's how I look at it. Usually I look for 5 minutes for confirmation, 30 minute and stuff is for like the bias and stuff, 5 minutes for the confirmation, and then 1 minute is actually just for better risk to reward. I think I had some losses here and there as well. I took quite a few L's yesterday because I was trying to trade every single bit and then like going too much into the 1 minute. It was overall a very good day. We had 2 very obvious trades, but this just goes to show, like, even when you have 2 very good trades, your psychology can still mess you up if you're trying to trade every single small movement. I guess the lesson for me from yesterday was, don't be focused on the 1 minute too much. Look at the higher time frames, look at what it's trying to tell you, and focus on that instead. So yesterday, if I took that Asian session liquidity sweep kind of trade, I probably wouldn't have targeted this top. I probably would have targeted around here just because of these 2 fair value gaps and because it was overall still bearish. One thing that I realized now in hindsight is that this low was a liquidity sweep, right? So we didn't really have a market structure shift. So since this low was just a liquidity sweep and we didn't actually come through that low, this high then becomes weak. So since it's a weak high, we could actually just target these 2 because they're both weak highs. That's why in hindsight, that's what I realized. But obviously at that time, if I was to target, I would have targeted that. Or you can just target a 1 to 2 and then leave the rest running here. This was honestly just like, I actually don't know why it went all the way up there, but that's fine, because ultimately after we swept liquidity from there, it ended up coming down anyways, and then coming down to sweep our last liquidity right here. So we ended up getting that liquidity sweep anyways, but I wasn't involved in this move because this was like midnight time probably when I was asleep. So see you guys in the next video, and I hope you guys enjoy this one.